Today, I want to discuss whether or not buying Tesla's stock at the current price is a good idea or not. Tesla has seen absolutely explosive growth over the last few months, hitting nearly $1,800 the other day before we saw a retracement. What is fueling this incredible growth for Tesla, and am I buying Tesla right now? My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild markets. By the way, if you are looking for a great way to earn interest on your dollars, then check out BlockFi, who is today's episode's sponsor. Their interest accounts are giving 8.6% on dollar coins like USDC and Paxos and 6% annual interest on your Bitcoin, which is way more than any bank account is going to give you. So stop being robbed by your bank and get your dollars actually working for you. BlockFi is definitely my preferred lending platform, and as a special bonus right now, they're running a limited time offer for new users who sign up. You can get up to $1,000 bonus just for making a trade on BlockFi's exchange platform. There is a link down below where you can learn more. Okay, so Tesla is a brand which really needs little introduction. It's very famous, obviously, but many people think that Tesla is just a car company. But it is so much more than that. It is a software company. It's a technology company. It's an energy company, all rolled into one. Tesla is a truly revolutionary company. It's definitely a new millennium kind of company. In my opinion, it's probably one of the most consequential companies in the transport and energy sectors at this time. Tesla's products include electric vehicles ranging from cars to trucks to semis. Now, the early models of Teslas, they've been wildly popular. Names like the Tesla Model 3 that will be on the minds of many a car aficionado. The much anticipated Tesla Cybertruck had an insane amount of pre-sale demand, and the Tesla semi-trucks, I believe, will be an absolute game changer for long distance shipping. Imagine having trucks that can run 24 hours a day with no drivers. And these vehicles, while ragingly popular, are still a total niche in terms of total market share, with the sales of petrol-based vehicles, of course, still maintaining the majority of sales globally for cars. But the upward trend is for electronic vehicles, which are gaining a lot of popularity, which says to me that we are on the edge of a revolution in transportation and in consumer habits. This is super impactful, potentially as impactful as the introduction of the combustion engine in the time of horses and buggies in terms of what we're talking about with electric vehicles coming into the market. Now, of course, the EV part of Tesla just tells one part of the story because they're not just electric vehicles. The driverless technology which they're developing will make human drivers completely obsolete at some point in the future, which I personally think is great because humans, we kind of really suck at driving. There are 1.35 million car deaths a year, with millions more suffering life-altering injuries. Computers driving cars, they're not going to get tired, they're not going to get drunk, they're not going to be fighting with their spouse or looking at TikTok instead of focusing on the road. And building on top of this technology is the coming launch of Tesla's autonomous taxi service, which will be powered by its autopilot software, allowing anyone who owns a Tesla Model 3 or a Tesla Model S to be able to earn revenue with their car by adding it into the network and basically letting it operate as a taxi while you might be, for example, at work or at a party. Your car is not going to be sitting there losing you money. Instead, it's going to be out there making you money by doing a robo-taxi service instead of sitting in a car park for 30 or 40 bucks a day. And obviously, Tesla's going to get a cut of all of the transactions happening on their service. Now, considering the existing fleet size and thus the potential network effect for this when it goes live, it's going to be an immediate threat to companies like Uber and others. This will also change the revenue model of a Tesla really overall in a very, very big way. So instead of just having one-off hardware sales in the form of cars, they're now going to have residual income for the company by charging passengers of their robo-taxi services per mile, and of course by taking a platform fee. Now, this service will begin rolling out potentially as soon as this year in some regions, depending, of course, on regulatory approval. We know regulatory approval can sometimes be gosh darn slow, but hopefully we start seeing that soon. It's very exciting. The future is happening here right now. Driverless taxis is wild. And look, Tesla's, of course, it's so much more than just cars. It's also innovating in the energy sector with solar roofing tiles, solar panels, energy packs to store solar energy. Very, very innovative. Now, this can all fundamentally change the way that power is produced, and of course will introduce so much more efficiency into our global power system. The big challenge right now, of course, for Tesla is to continue to deliver all of this incredible technology in a way which is highly capital efficient. So in service of trying to achieve that goal, Tesla has been deploying what is called the Gigafactory. So right now, Tesla stands a very good chance, in my opinion, of being far more capital efficient compared to competitors when making combustion engine cars, since of course an electric motor has way fewer moving parts. Even competitor Ford's research has stated that electric vehicles can be produced at 50% less capital investment compared to gas-powered cars. In fact, Tesla's production costs have fallen dramatically as their network of factories continues to grow. Tesla is moving so fast that they could be delivering up to 4 million cars a year by 2025 and capture up to 7% of the Chinese market and up to 10% of the US market. Those are big, big numbers if they continue to innovate the way they have been. And speaking of China, Tesla has just opened up a new gigafactory over in China, so that's some exciting news adding to the FOMO happening around Tesla right now. One thing for investors to keep in mind, though, with Tesla is that Tesla is a growth tech stock. It does not pay a dividend, and it has off the charts ratios right now as well. The PE ratio of Tesla is 364, while the average of its automotive competitors is much, much lower. For example, Toyota's like a 9, so it's a massive difference. And by the way, Tesla, in spite of that PE ratio, overtook Toyota to be the world's most valuable automaker by market value. But Tesla, again, it's much more than just a car manufacturer. And you have to factor that in when you're considering the appropriate value for Tesla. This is a growth tech stock. Stocks in this niche, they can be hard to value. I mean, look, Amazon's PE was once over 3,000. And now the stock is also on the fricking moon. So the PE ratio didn't particularly matter in that situation. Also, the PEG ratio, which is a more growth-focused metric for Tesla, is 9.09. Now, for a PEG ratio, you really want this to be the smaller the better. A number around 1 is generally considered ideal by investors. So Tesla, again, way, way out there. But investors are looking at the growth potential for Tesla. When we look at Tesla versus other car manufacturers, Tesla is just so far ahead technologically when we start talking about the electric vehicle market and in terms of its self-driving technology. The competition definitely has a steep hill to climb to catch up to Tesla. But in my opinion, the switch to electric vehicles is completely inevitable, and so is the switch to self-driving cars. Electric, driverless cars will very, very quickly become the standard for cars. Tesla is an innovation hotbed, and it is outmoving competitors at every turn and is well positioned to capture a big portion of the market. Then, of course, we do have to factor into Tesla as well the FOMO factor. People just freaking love Tesla. It's got like almost a cult-like following, has a very charismatic leader in Elon Musk, who really built it's amazing what he's done, building a car company from scratch in this century and being so big already. It's now worth more than any of the other automakers at any point in history. It's astonishing what's been accomplished. And look, I love Tesla. I really, really do. my next car, it's probably going to be a Tesla, but I'm not buying Tesla stock here. Why? Because the old saying, be fearful when others are greedy and greedy when others are fearful, comes to mind. Heck, even Elon Musk himself says that the stock is overvalued. I personally would load the truck up on a substantial pullback for Tesla. And since, of course, parabolic moves often end in dramatic pullbacks, that is possible to happen at some point in the near future for Tesla. But I can be very patient, and I'm actually willing to miss an opportunity. If I don't get Tesla stocks, my life's going to keep moving forward. The risk to reward ratio right now on Tesla, it's just not as appealing as some other investments. Now, if Tesla paid dividends, that would be a different story, but it does not. So the best hope would be looking at the bull case put forward by Ark Invest. Now, they envision a possible $3 trillion market cap for Tesla, which is obviously massive. That would be around a 10x move from here, giving each stock an approximate value of $15,000. So that, of course, assumes that everything goes really, really well for Tesla and that they do achieve all these things that we're looking at them to achieve. And look, a 10x gain, that's nothing to be shy about. But this is far from a certain outcome, even if one investment firm thinks that that has a 25% chance of happening. The bear case from Ark Invest puts Tesla at right around the current price, actually, with a mid-range prediction of $7,000. All of these predictions, they are scheduled within the next 5 years. We could see a $15,000 Tesla potentially by 2024. Now, short term, though, the Tesla party could result in a big hangover if the earnings reports due out tomorrow fail to meet expectations. Now, this combined along with the ongoing pandemic in the United States, which could, of course, push more slowdown in consumer spending, particularly on high-ticket items like new cars, that could create some real headwinds for Tesla's stock price. However, if Tesla's earning reports are good, like quarter one was, then it becomes very likely that Tesla will be added to the S&P 500 index. Now, this would be an incredible boost for Tesla's shares if that happens, since tons of people like to buy index funds. And these index funds, if Tesla's added to the S&P 500, they would all need to go out and buy Tesla stocks to add it to their funds. It would be a massive inflow of cash to Tesla's stocks, with estimates of around $66 billion being used to buy up Tesla stocks. So that would be pretty gosh darn big catalyst in the short term. But even if the earnings report is bad and Tesla doesn't make the cut for inclusion in the S&P 500 now, Tesla still remains a powerful hotbed of innovation and will remain a very, very popular stock for investors for the foreseeable future. Anyway, I would love to know your opinion on Tesla's stock. Do you own Tesla stocks? Have you bought them recently? And what is your price prediction for Tesla? Let me know down below in the comment section. Thank you so much for watching today's video. As always, I massively appreciate your time. So thank you so much for watching, and peace out till next time.